Oh, and the deputy governor. Wow, the whole leadership is here. Yes, please, sit.
Critics of the controversial Protection of Sovereignty Bill 2026 are up as Bank of Uganda joins them.
Article 162, subsection 2 of the Constitution clearly protects the Bank of Uganda from being subject to direction or control of any person or authority in performing its functions.
The Governor, BOU, Michael Atingi-Ego, has expressed various concerns that could contradict the existing legal framework suppose the Protection of Sovereignty Bill 2026 is approved.
And Chair, in addition, with respect to matters concerning financial institutions, the Financial Institutions Act takes precedence over any enactment, and in case of conflict, it shall prevail.
Michael talks about regulatory fragmentation, which could result in overlapping regulations and affect economic growth. The governor warns about the intentions to usurp the independence of Bank of Uganda.
This assessment argues that the bill in its current form risks introducing regulatory fragmentation and subjecting this economy to voluntary shocks, potentially undermining the very economic strength upon which true national sovereignty is built.
Michael Atingi-Ego reveals how the legislation risks reversing 3 decades of successful financial development through liberalization that has sustained economic growth.
What this bill is introducing, it is introducing what we call time and policy inconsistency. That is going to threaten the tenfold growth that the government of Uganda is aspiring. If you look at our investment levels that are required, they are far much lower than the savings we have. So we require foreign capital to fill up this gap.
The central bank has asked Parliament to allow it to retain exclusive authority over the financial sector.
Because the bill is so restrictive in regulation, is likely to drive actors into informality. We are going to have informal channels again coming back. Think like the Hawala systems or the unregulated financial instruments, which is eroding the tax base and undermining the bill's stated goal of transparency.
BOU is against the requirement that the minister approves foreign financial support above 400 million shillings and the prohibition of banks from paying out funds to foreign agents without the minister's authorization.
Also, Honorable Members of Parliament, we are now in a digital economy where real-time transactions take place. Now, we require the Minister of Internal Affairs to approve any payments that are going to be made by agents of foreigners to foreigners. In a real-time payment, straight through processing, at what point does the Minister of Internal Affairs come in?
Several stakeholders have objected to the proposed legislation, which government claims will be the only solution to regulate foreign interests that targets destabilizing the country's sovereignty. The Financial Intelligence Authority Executive Director Samuel Wandera has backed Bank of Uganda by presenting to the MPs how the bill will likely cause more harm than good.
And Chair, of course, given the good intentions at the Financial Intelligence Authority, we think that this bill may create some unintended consequences, which will be increased informality and illegal channels of financial inflows into the country, such as alternative value transfer systems, including the use of the hawalas, the virtual assets, and this may obscure the visibility of such transactions by law enforcement agencies.
Bugweri County MP Abdu Katuntu accused the FIA of negligence, which could have provoked government to introduce fresh legislation.
You remember we set you up by an act of parliament because we thought everything here which has been brought, you'd be able to handle it. is this a confession that actually you failed in your duties? And therefore we are setting up a parallel system. And since the bill came up, have you two, either Bank of Uganda or FIA, talked to your line minister, say what is this going on? If you haven't, then you're not doing.
These institutions already are operating effectively under well-established statutory mandates, and reaffirming their primacy would preserve the regulatory coherence and accountability, avoid dual licensing and inspection.
The concerns presented by the authorities, including Bank of Uganda and the Financial Intelligence Authority, could hold intentions of the government to add color to the safeguards of the Constitution. Daniel Mugoya, Gloria Gwitabinji, UBC News.